I like the original intent of the stock market, raising capital for companies that needed the amount of money to build that big of an infrastructure so they can go public to raise that capital. Now, why do people go public? To cash out.
Mm-hmm.
And you know what? I don't love these companies that have major negative cash flow, WeWork, Uber, Lyft, that are then going to go public and cash out when they haven't even proven the model to be cash positive. So I do not participate in the stock market at all. $0. None.
It's crazy, man. And it's scary too, because you laid out such a perfect path there. So if we get from paying off debt and loans and everything to investing in yourself to maybe eventually cash flow banking, right? And then investing in something, this is why I love your concept of investor DNA. Because what I found, and I want to dig into these questions from people, because what I found is everyone who has no experience in finance or investing of any kind or entrepreneurship or anything, they just go, well, I want to be rich. So 401k and I want to buy real estate. And I'm like, but you know nothing about real estate. What do you know about real estate? And they're like, well, nothing, but that's how people get rich. I'm like, no. Real estate keeps wealthy people wealthy. It very rarely makes them wealthy, right? Am I right about that?
I got my ass kicked in real estate because I had that same belief as the people you talked about.
It's so common, man.
If you're not going to treat it like a business and it's not a full-time gig, prepare to lose money.
Yes, I totally agree.
And yeah, there's people that store their money there. But the people that make a lot of money in real estate are people that treat real estate as a business, and that's their profession, right? I spoke at an event last April with the guy's last name is Cummings. I think it's Bill Cummings. He's a billionaire out of Massachusetts, and he did it in real estate. But that's his business, is just real estate, right? So think about it. Someone goes, I'm going to do real estate, but they do it like in their free time.
Yeah.
So now they're going up against software that has been built that people are phenomenal at analyzing whether these deals. And with people that get tons of deal flow, or people that have a lot of people that want to partner or buy, or because I've been on Kiyosaki's podcast a couple times and done some interviews with him, and he's got a lot of people in his database. If he wants to sell his real estate, he's got a lot bigger group of people willing to buy than your average investor. He's in his 70s still going to real estate seminars. He's got real estate partners that that's the only thing that they do. So to think that we're going to do this as a part-time venture is a pipe dream, and it's going to put people in harm's way. So you better get educated about it. And then there's other people that just want to put it in funds with real estate. Man, I had a hard money lending fund that we just struggled with, and I felt like I was more knowledgeable than most. But 2008 made it really complicated and difficult on us. I had in 2000 hard money lending fund I was referring people to. And they got all their money back and were made whole, but not at the time frame they were supposed to, and they didn't earn interest because it just doesn't always go according to plan.
Yeah.
So it's like, if you want to be passive in real estate, there's a lot of risk. If you're going to be active, it better be your main gig.
Yes.
And outside of that, just plan on having some really hard lessons.
I totally agree, man. And it goes that way for anything, because you look at crypto, right? Like everybody got into crypto, people buying crypto who don't know what blockchain technology is. Right. And most people lost their ass. Yeah, you hear a couple stories of the crypto millionaires. Most people lost their ass when it plummeted.
Yeah, I know a few of them that did really well.
Sure.
A handful, some that did really, really well. Actually, probably 10, but I know a lot more that didn't do well.
Absolutely.
And dude, I got to tell you, that was the hardest thing for me not to jump in on. I was dreaming about it. I called when it was still in the, I don't know, it still hadn't hit triple figures. It was still really cheap. I called my accountant. I'm like, I'm going to put 25 grand into Bitcoin. And my accountant knows me well and goes, explain Bitcoin. And I was like, because my rule is if I can't explain it in a paragraph or less, I don't know what I'm doing. And, so we didn't do it.
Yeah.
And, I calculated what that was at its height. And I was like, it was really hard on me for a minute. And I was like, I have a real business. I've got I got real value I'm creating. And I finally got over it. And it would have been a bad thing, I think, for me to get in it, because it would have created a gambler's mentality, because I would have involved in something I knew very little about. I made a lot of money on it. Where my co-author of 5 Day Weekend, that dude's made a boatload in crypto, but he had his own mine in Iceland.
Exactly.
He was involved early on.
And that's who you're up against.
Yeah. And I'm like, he's always talking about how he's selling the picks and shovels and everybody else is speculating for the gold. So he did well because he was pretty intelligent about how he did it. and he's studying it all the time. And, and he wrote it off a couple times. He had his original amount of Bitcoin stolen.
Wow.
Right. It was a wild west. And then he had to go rebuild it and find out the most secure ways to handle all this stuff. So, yeah.
Yeah. People look at all of it. The stock market. How do I get involved in the stock market? Why? Why do you want to? What do you know about it? Crypto. How do I get involved in crypto? Why? Why do you want to? What do you know about it? And then the real estate thing, I found you and I have been around some of the world's best entrepreneurs. I'll see these guys they're making millions of dollars on Amazon, right? And then they will hire somebody whose job is to go find the best deals, flip houses, they buy that house, and then there's a management company managing it for them. So rather than them learning this learning curve of real estate, they hire a professional that does this for a living. They might own 6 or 7 properties. They're really just parking the wealth that they made from their cash flow company.
Yeah.
And it's a totally different scenario.
Yeah. So, I mean, you mentioned baby bathwater, which is a thing that we've both been in. I remember going and speaking in Croatia, and then I was on a panel, and I met one of these real estate guys, and I usually don't know, I'm always going to see eye to eye, but I totally saw eye to eye, like the number of deals he was turning down, how he was talking to people, loves cash flow banking, and he's had a good success because he's built a system,
Right.
and understands where to capitalize on the inefficiencies. And if you're going to get in real estate, I just did a video with the 15 main things you need to be aware of before you get involved in real estate. It's not out yet on YouTube, but it's like, make money on the buy so that you buy it at a discounted value, and you can turn around and sell it because someone's in a distressed, uncertain situation and you have a lot more certainty around it. Get cash flow from day one. That's going to mitigate your risk substantially, right? And invest in what you know. Don't try to be good at fix and flips and then commercial and then a fourplex and then a resident. Like, get good at one area, dial that in, be profitable there, and make sure you've got certain amounts of liquidity and understanding around what you're doing before you just dive in.
Yeah, I couldn't agree more, man. That was one of the questions we had. So I don't want to monopolize all your time. I know I've kept you for a while, man, but I really appreciate you doing this. Is it
I
cool?
appreciate you reading all my stuff, implementing it, being a living example of it. It's good emailing back and forth a couple times when Hollis told me you were in baby bathwater, and then Rob said great things about you as well. So
I love it, man. You've been super hands-on and accessible too. So that means a lot to anytime someone's that way. It's awesome. So can I pick your brain on a couple user questions?
Yeah.
Okay, cool. So the first one, and this one's huge, and I'm interested in this selfishly too, because I know what it means for me as an entrepreneur, but this is the concept of taxes. So you're an expert in helping people stop the leaks, like you say, like 10% of people's income is going to unnecessary taxes and all these things. But my question is, I know where you stand on this for entrepreneurs. What about the average W-2 worker? Are they overpaying taxes as well?
Not as likely that they are, because it's kind of, they just have to pay what they pay.
Okay.
Here's the big mistake a W-2 earner has when they get a tax refund. It means that you just gave the government a interest-free loan. So you want to change your exemption so you don't, you want to keep it within $1,000 that you would either owe or that they would owe back to you, so that you can keep that money working for you along the way.
Okay. Yeah, I heard a scary statistic that it was like 60+% of the population didn't realize that their tax refund was their own money coming back to them. Yeah. They thought the government was paying them. I was like, oh no, this is brutal.
How to help people, man. They're doing the best they can, but man.
It's just like nutrition, man.
The world has tried to make it complex. The institutions want it to be confusing,
Absolutely. So another one we had was, this was from a mama who needs to buy a van, but she's in her 30s. And she says, what do you say to someone who's never played the game? So now she's in her 30s, has zero debt, but zero credit as well. How can she go from no credit to enough credit to buy a big purchase like a van?
Apply for 3 to 5 credit cards all on the same day, so that it only looks like one inquiry. And even if you're not going to use them frequently, just use them once a quarter. Charge, pay it off. It'll build credit depth. Okay. That's super helpful. That'll help you to go get a loan for a vehicle.
So, beautiful.
Yep.
That's awesome. So we talked a bit about debt. This person had a specific question about student loan debt, which we talked about. This is very common. So she says that she has been putting off these student loans with income-based deferments, but obviously she's accumulating interest. Is this a good way to tackle this, or should she be trying something different?
Depends on your interest. Are you earning a higher interest rate than what you're paying on that deferment? No big deal. If you're not saving money, and you're just accumulating that deferment, maybe you need to start making a payment towards it. But I talked to Tim Carden, who's one of your coaches, and he says most of their strategies around student loans are just making sure that they get the lowest interest rate possible. And then old student loans, it seems like it's easy for people to out earn. Newer student loans are higher interest rates, so they're just getting people to pay them down.
Cool. So again, the idea of if you can out earn that interest rate, you're okay. So the next question we had was about allocating income. This person has heard a concept of allocating savings called the 50-30-20 rule, which is 50% bills, 30% fun, and 20% savings. How does this compare to your allocation?
That's a little high on the savings compared to my allocation. I'm on 15%.
Okay.
And I don't differentiate after that on the remainder money. It's just after you've done 15%, 3% for your guilt-free spending, and then the rest of the 82% to live on. And mine is definitely much higher on the fun side than it is on the other piece.
Okay, cool. Good to know.
You get a lot more money coming in. You got a lot more options.
Yeah, absolutely. So the next one is about investing for kids. And I know this was touched on a bit in the Bank on Yourself program as well, as cash flow banking thing. So I'm interested to get your take here. This is another mom who says she has a UTMA savings account for her 10-year-old with less than $3K in it, and she's contributing $100 a month. Should she continue this, or is there something better?
Yeah, it's cool that she's doing that. I like to see that, that takes real love and thought and being deliberate to do that for $100 a month, and you get some money in there for your child. So that's awesome. What I do, I don't know if it's better, but I actually, because I'm a business owner, I hire my kids. I can pay them up to $1,000 a month or $12,000 a year, tax deductible to me and tax free to them. And then I actually put that into cash flow banking under their name.
I remember you talking about that. That's brilliant. I love that idea. And there's a lot of those weird little tax things. Like I can have business events at my house 14 days a year.
14 days.
Yeah, such cool little things like that, man. So we had a question about the stock market, but we just talked about that a bit and the correction and all these things. So this other person has an interesting question. This is the last one I'll take from the clients with you, but it's basically on the psychology of investors. So she cited Black Monday, this event in 1987, where everybody panicked, and these were all professional investors. So like you talked about, a lot more about the philosophy and psychology and those things. Does it concern you at all that we now live in a world where just any average Joe on the street can sign up for an E-Trade account and trade stocks? How does that change things? Does that make things more volatile than it was back then?
No, because there's something that's way worse, and it's the supercomputer. So I read a book called Flash Boys, and Flash Boys talks about the advent of building this fiber optic system where when you go to buy in the stock market with your average Joe that has a Ameritrade account, a flash trade comes in, bumps the price, and skims you. And so there were flash crashes that we saw where we would see hours of a trade just going, like the market just diving and then coming back. That's a flash crash because of the supercomputers and the things that were happening. And people had no clue what was going on until someone out of the Royal Bank in Canada finally figured it out. Because what happened is you have to go slow with your trade to find out what was happening underneath it, and everything was too quick, so it would happen so fast they couldn't even see it. But when they got slower, they would see these people fishing to mark the price up when you're trying to buy. So the flash crashes have had more impact than your average investor getting in there because of the amount of money that they're dealing with. So when major institutions sell, the thing is, there was something called the reciprocal desk. So the reciprocal desk, if we go back to 2008, let's say Lehman Brothers, let's say that they needed to, do a trade, but they were short on cash. So they could actually go to the reciprocal desk. They would give them the money until the trade happened and their liquidity came through. And that worked for 100 years until it didn't. When they were finally like, don't give it to them. And all of a sudden they get in trouble. Everybody shorts their stock, meaning they're selling it as if it's going to go down, and it kills the account. So that happened to, multiple companies, Lehman and those guys. And so I feel like some of these things, they work until they don't, and it's a matter of time, could we have what happened on Black Monday back in 1987? Absolutely, because major institutions that choose to do what's called a naked short sell. The naked short sell is they could just drive a stock all the way down, and there's not a lot of there's not enough protections around that, and so that's part of what we saw with some of the major drops in 2008. And yeah, I just don't invest in the stock market for a number of reasons. Number one, the fiduciary responsibility of a CEO of a publicly traded company is to the shareholders, not to the employees and not to the customers.
Right.
And so my problem is we continue to have corporate greed and pressures of stockholders creating short-term thinking at the expense of the population.
Yeah.
So I don't like to fund public companies because even our beloved Warren Buffett, that is quotable and cute as hell for an old man, but the bottom line is ruthless as hell when it comes to business.
Of course.
Buy a company, they strip that company to the bare minimum employees that it requires to produce the results. So they build that stock value on the back of employees who actually have families and a life that they now have to suffer because now a shareholder who just put money in there and sits back and collects more than they could ever spend. I just don't like that. I like the original intent of the stock market, raising capital for companies that needed the amount of money to build that big of an infrastructure so they can go public to raise that capital. Now, why do people go public? To cash out. And you know what? I don't love these companies that have major negative cash flow, WeWork, Uber, Lyft, that are then going to go public and cash out when they haven't even proven the model to be cash positive. So I do not participate in the stock market at all. $0. None.
That's such a good point, man. I really didn't even think about it from a philosophical standpoint like that. I mean, I look at it as like, I don't want to be up against supercomputers and people who this is their full-time job. Right. But damn, yeah, that just hit me like a ton of bricks. That's a really good point.
Dude, I was just at this event and this woman sitting next to me was a day trader. And I was like, I want to be respectful in my question, but it's a true question. I said, you do day trading. Why? She's like, because it provides me a good lifestyle. I'm like, yeah, I get what it does for you. What does it do for the world? She's like, well, it provides me a way to earn money no matter where I live. I'm like, yeah, that's you. But does it bring liquidity to the market? Or is it simply you're smarter than someone else, so you take their money?
Wow.
And then my wife grabbed my knee, like, shut up, you're going to make her cry. But it was a serious question.
Yeah.
It was like, why do things if we don't know the value it provides to multiple people?
Right.
Goes back to our zero-sum game. We're not living in a winner versus loser. We can all win, but we have to have that mindset.
It's so true, man. And I really wasn't thinking about it like that because last week with the crazy sell-off, like I have some additional cash. That's the first thing I'll say too. If you're going to invest in stocks, make sure you have your foundation finances set, hopefully some cash flow banking and everything. Only spend money you're willing to lose. But I looked at it as a game. I said, some stocks are discounted and I grabbed some and I've already made a great return on that money. I used trailing stops to do that, which was, I talked to Tim about it and everything. Yeah. But man, you got me second guessing, dude. I didn't think about it that way because I care so much about what I do.
I get that energy that I'm not spending buying stocks to put into things that matter to me.
Yeah.
Writing books, filming videos, spending time with my family. Like, dude, I could I'll be candid.
Okay. I
could be worth 4 times more than I am right now.
Yeah.
If I sold the stock market. Can you imagine if we sold you stock market? I get paid so much more on you.
Yeah.
And you have your account with us forever. And I get paid every month, whether it makes money or not. Right now, how do we get paid? You write us a check.
Yeah.
That's the only way I make money is you writing us a check.
Yeah, that's it.
You have to know that you're paying us versus having it automatically come out. But you know what? I know better. And my life's still pretty amazing.
Yeah.
So I don't need to go sell out to make more money. I make enough to have the life that I want. Yeah. Why do I need to go sell out my energy to chase more if it doesn't really fulfill me more?
Dude, I'll give you a great example of this and I've talked to Rob about this as well. Rob and I have talked about like the mission versus making money because him and I both are like, why are we not as good at making money as these other people? But I have had multiple times where companies will approach me and be like, hey, you need to just make your company an MLM, make it a pyramid scheme, and you will make 5 times more money than you're making like within year 1. And I just won't. I'm like, no, I refuse to do that. But I didn't think about it on the back end. I might be investing in companies in the stock market that are making decisions that I don't agree with morally.
Right. And what's nice is we can all make a good living without having to sell out.
Sure.
And in the long term, we might not suffer major losses when we were disconnected from the outcomes.
Right.
So our problem is not a lack of opportunity, man. Our problem is a lack of discernment between opportunities and distractions. And some money-making things are merely a distraction, even if they make money.
Dude, spot on. Yes, I love that. I love that, man. Thank you for the reminder. That's a big deal. So, but anyway, dude, I know I don't want to take up all your day here, but
yeah, I appreciate this. Is fun. It's good.
Yeah, man.